Andrew Goldberg, you're a global market strategist for JP Morgan. You're an American based in London. How was the time during the government shutdown for you living in Europe?
It was really interesting for me, having only lived here for 1 year, to see, in fact, how in tune European investors are, not just in Europe, but also in the UK, and in fact, even in Asia, to American politics. It's one thing I actually wish I could let American politicians know, is that the world is watching, and we need to get our act together so that the world can get done with the uncertainty and move forward. It's been very interesting watching from abroad. People are keenly focused on it.
So moving to Europe changed your mind?
Yeah, you know what's interesting is, being an American, I was always very open-minded about the world, but being in Europe and seeing the economy firsthand, traveling to countries like Spain and Italy and Portugal, has really opened up my eyes and helped me do my job better, because you can be more in touch with real people that are living through these challenges, and also get a lot of perspective from people on the ground. That's one thing that we try to do, in fact, is we've built a very local team around the world. We've got strategists in Asia, we've got strategists in Europe, we've got strategists in the States and Latin America. But for me, as an American, it's been very beneficial to be able to see it here on the ground in Europe.
You're analyzing financial markets. Can you give us some hints where we still find good possibilities to invest regarding other markets on all-time high? Do you see some value propositions?
I love that question. Oftentimes what we're asked about instead is where we see challenges and risks, and for every risk there's an opportunity. And we do see some opportunities. I'll start with the opportunity that we still see in the States. You mentioned new all-time highs. I think it's really important that we think of these as new highs, but not necessarily new peaks. If you look today relative to historical peaks, the stock market's not expensive, but also if you think about it in the context of the level of interest rates, we have to make decisions in our portfolios, stocks versus bonds and things of that nature. And stocks are cheaper than fixed income. For example, to some extent, the value that you're willing to pay for equities should be dependent on what you can get in bonds. And if you can get 5 or 10% risk-free in bonds, that's great. But right now you really can't in most of the developed world, unless you maybe live in Spain or Italy, and I would still hesitate to call that risk-free. And so we still do like equities over fixed income, and we think there's room for earnings to grow in the US because there's a tremendous amount of pent-up demand in the economy. Now moving to Europe, I see tremendous opportunity as well. I think it's going to be much more difficult though, because you have to identify the right securities. And while it may sound self-serving for somebody from JP Morgan to say this, I do believe that it's very true. We do need to use on-the-ground active managers that can analyze the specific companies that they're investing in. I think there's a time and a place for a passive, and now's not the right time for a passive manager, because that'd be just buying the index. Not all companies are going to benefit from the improvement. And then finally, one important opportunity that I would suggest for investors, while there's still time, we believe that interest rates are going to continue to rise, even though it may be gradual. There's still time to diversify out of the bonds that will get hurt the most when interest rates rise. And I think that by and large, those will be government bonds. So I think investors need to diversify their fixed income portfolios out of government bonds into shorter duration, corporate, credit sectors, maybe even emerging markets bonds as well.